Hi, good evening. Welcome to our weekly market outlook. Today is 21st July 2014. So as usual, if you can hear me, just give me a yes so we can start as usual. Okay, very great. I saw lots of yeses coming. So today we have some new people to join us. As usual, we just give introduction of how we construct this weekly market outlook, the webinars. So the first part, we will give you the market analysis, like what happened in the past week and this week. In the last week, of course, the most important thing is the China GDP and the Fed Yellen testify. Also, we have some unexpected news, which is the Malaysia airline, the jet was shoot down again. So of course, that have some impact to the financial market. Let's say we see some safe haven assets is going higher and some risk assets was selling off, like the US equities. So anyway, we will just share with you all the insights for the last week and what probably the thing will carry on for this week. And also for the second part, we will have the weekly data. So from the weekly events, we will let you know that what kind of events probably will influence the financial market for this week and also for the currency market. On the third part, we will have the live charts. So from the live charts, we will share with you what kind of prices you can looking at to long or short, or what kind of resistance level or support level you can take a reference. So for the last part is the Q&A sessions. So we encourage you to type in the questions, all the questions if you have. So by the end of the sessions, I will answer as many questions as I can. Right. So let's start our today's webinar. For this week, we mentioned something about the Fed, Janet Yellen, and also the geopolitical risk. Actually, the data is pretty light in the past week and even for this week. But we have some special event like the Ukraine issue, like the Janet Yellen. Also, we will see some Chinese data and the European data out this week. We take a look on the last week's events first. What kind of data you can see? It's pretty light. The UK CPI topped the forecast, rising to 1.9% year on year. That's the reason you see on the CPI announcement, you can see the sterling actually is shooting higher. Right? Why sterling shooting higher is the Bank of England. The target, the inflation target is about 2%. So now it's only 0.1% lower to the central bank's target. Also, you can see the latest housing data in UK, the May, actually the housing data surged 10.5% year on year. So all these kind of data give the traders, the investors, expectation that the Bank of England probably will raise the interest rate probably as early as next quarter. Next quarter means October, November, or December. If they raise the interest rate, you probably can imagine how the sterling will move for this week, for the coming a few months. And also, if they don't hike the interest rate by end of the year, probably they were looking at to no later than maybe first quarter next year. So, and as you know that the financial market is never react after the events happen. They always react before the events happen. So that's the reason you see UK probably will, the sterling probably will stay in the high end, the high side for some time. And let's say if you are not very sure about how the dollar move, because you know on the other side we have the Federal Reserve, Janet Yellen probably will also use their own language to influence the US dollar on the US Treasury yield curve. You can always looking at to pair sterling with euro, right? So that is one of our star pairs, star trading target actually in the second half of the year. And the German zoo economy sentiment also dropped to 27.1 from previous 29.8. This is the confidence index on the German side, what's their confidence on the future economy in the next 6 months. So the confidence drop is definitely not a good thing. It means something is not so good compared with the first quarter, right? Especially Germany is so important because the first quarter GDP is purely led by them. The entire Eurozone GDP is only up 0.2%, but Germany first quarter GDP was up 0.8%, right? So if Germany cannot lead the economy in the second quarter, means some growth, the growth in Europe probably will be a little bit shaky, and the Q2 GDP will be out 14th of August. In fact, Yellen also doing some testimony last week, and there's nearly no new languages from the Fed chairman. Basically, everything is pretty similar to what happened to the FOMC last week. That you can, if you are missing the testimony, you basically can just refer to the FOMC minutes, FOMC statements, because everything is pretty similar. One of the important news for last week is that China GDP rose to 7.5% year-on-year in second quarter. That is 0.1% higher than the consensus. The consensus is 7.4%, but our forecast is the same as the actual result, is 7.5%. You can refer to our last week's recording, because we put quite a lot of time on analysis the China second quarter GDP and what's the future thing you can expect. So later we will also share with you what's the impact from the China GDP and what kind of policy will be exercised in the second half. So you need to know that the reason is because from the next few months, probably the Aussie and the Kiwi will still continue to track with the Chinese economy. If you look at the Aussie dollar from April, January until now, it's on a not very solid, but it's still a rising uptrend. One of the reasons is because the China growth is stabilized, because the government putting lots of stimulus easing measures. We will also share with you what kind of measures is likely to carry on in the second half of the year. So what to watch this week? This week, basically, you have a few things to watch, right? We have a lot of events around the world every day. So on this box, we will always share with you what kind of important data is actually probably will influence the currencies or influence these countries' financial market. Australia, we have the CPI, the inflation data. Also, New Zealand, also we announced the cash rate, the OCR cash rate. Probably they will raise to 3.5% from the current 3.25%. So on this week, if you are bullish on one currency, probably you can looking at either Aussie or either Kiwi. If you want to bearish on the other currency, you can always pair with Aussie Kiwi to this currency. And also on Wednesday, we will have on the morning, we will have the China flash manufacturing PMI. This data is very important because it tells you how the Chinese economy probably will move in the third quarter, because it's a July flash number. Right? So if the July, the first month, is continue to have an uptrend, that means tells you that the third quarter, the Chinese GDP probably will be stabilized and Aussie will go higher again. In the afternoon, we have the Eurozone manufacturing PMI, and this manufacturing PMI is likely to go lower again after the downtrend for 3 or 4 months already. So just based on here, probably you can looking at to short Euro Aussie in Wednesday, right? So it's not guaranteed event, but probably the chance is there. You can always refer to the data, because I know there's a lot of people like to trade the data, because the data will give you the fast return, and also you can if you do some analysis, it's most of the time it can be accurate. And on Friday we will have the German IFO. That's the other thing, is if the German zoo is go negative, so the IFO is likely to go negative again, because the German IFO is based on if I'm not wrong, it's about 3,000 the company chief executive. So based on the surveys, it tells you how the company's optimism on the economy outlook in the coming a few months. So basically, that's a few data you need to watch for this week. Let's move to the next slides. We will have a macroeconomy summary first, as usual. Let's take a look on the currency performance. Last week, you can see that basically dollar is outperformed most of the currencies, despite Janet Yellen is pretty dovish, because don't look at the last week's currency performance. The reason is, on Thursday night, Asia hour, Hong Kong time, Singapore time, China time, on Thursday night, right? Everybody knows that about, if I'm not wrong, the timing is about 9+, 10+ p.m. MH17, the flight from Netherlands to Kuala Lumpur, and the time is when past Ukraine, the airplane was shoot will shoot down, and because it's on the geopolitical conflicts area, it's not like MH370 last time. It's a disappear, but it disappeared with no global political concern. So of course it have no impact to the global financial market. But this time, because the aeroplane was shoot down in a very conflict zone, so nobody knows whether the US and the EU will pose further sanction on the Russia, and who did it. It's also, so far there's no official statement. There's a lot of speculation, but our session is a financial session. It's not a political section, so we don't go further from here, right? So because of this geopolitical risk, you can see Japanese yen outperformed the greenback by 0.2% because Japanese yen is the #1 safe haven currency, right? So if you see Japanese yen outperform the most of the currency, that means something is wrong. Something has happened in the world, right? But you can see the general trend of the US dollar is going higher, higher, and higher, right? So you can see the chart below, which is on the red column. The first few days higher is because market expect Janet Yellen probably will be less dovish, and Thursday, Friday, it maintained the high side. The reason is because there's no conclusion from Janet Yellen. Also, dollar, although now it's not a very clear safe haven currency, but it's still considered not a risk currency. So if, let's say, anything happen, people will throw the cash into the US 10-year yield. So it will increase the dollar inflow. So this is one of the reasons you can see the dollar maintain the uptrend for last week. Whether it will remain this week, we still need to see how the China number goes, how the European number goes, but it's still relatively stable because the US economy looks like continue to relatively outperform the rest of the economy, right? And you can see the the sterling is only up 0.02%, but it's a still very attractive currency because from now toward the end of the year, it looks like we are closer and closer before the Bank of England conduct the first rate hike, right? Where the rest of the currency you can see is underperformed the US dollar, and you can see the Kiwi is down 1.36%, right? You have to know the reason why Kiwi down 1.36% against the greenback. The reason is because they announced a lower than expected CPI. That's the reason some traders pair the bets that they probably will hold the interest rate unchanged at 2.35% this week. But in our point of view and also in the market consensus, the problem in the New Zealand is it's not the growth. It's mainly also it's like UK. It's because of the heating housing market. So lots of macro prudent policy is like cannot contain the high price of the property prices. So the standing on the central bank point of view, they have to raise the interest rate, and so that's all for a snapshot of what happened on the last week in the currency market. So here is very clear that you can see that last week what's the momentum is. You can see from the last week is from 14 to 18. You can see from 14 to 16, people expect Janet Yellen might be a little bit hawkish, not so dovish. That's why you can see the Treasury yield is going higher and higher from 2.47% all the way go to 2.55%, right? But after that, the going down is not because of Janet Yellen, it's all because of the MH17 shoot down. So lots of people say how to trade dollar yen, how to invest in dollar yen, right? You can use our consistent models looking at the US Treasury yield, right? Why dollar yen can track with US Treasury yield is because US Treasury yield nowadays is the most sensitive market around the world, right? So anything happen, the US Treasury yield always moves first. So if you're a currency trader, you can always, if you have some insights of what's the next move of the US Treasuries, you can always use dollar yen, as a proxy to trade. So you can see after that, the dollar yen going lower and lower. So what's the move from here is we need to closely monitor the Ukraine issue. If let's say the geopolitical risk is okay, let's say stop from here, US and the EU not use any military actions against the Ukraine. Well, I'm not the military specialist, but let's say everything is cooling down from here. Of course, we expect more sanction probably will be from EU or US. But let's say on the geopolitical side, let's say everything is cooling down. Probably the dollar yen, now the current level is 101.2. Probably there was some support offer at 101 about that kind of level, and you can looking at to long dollar yen and to take profit maybe around 102 level. So but we still need to monitor very closely how the US Treasury yield goes, how the geopolitical risk goes. Equities, this is the US equities. You can see that it still remain very solid, although there's a selling off session on Thursday night, but you can see on Friday it bounced back again, right? So this is the S&P index. So the entire equity session, you can see if you trade, because we have some indices in our platform. So if you we have some people, they are looking at they like to trade indices, because indices probably, you know, they can give you a better consistent direction compared with the currency market, because currency market nowadays is you have to track very closely, right? Because every week have every week story. But for the indices, you know, some people feel like, you know, the US equities will continue to go higher, and European equity will also continue to go higher. So they are, you know, so they usually would, you know, would put a level there, then maybe put the position for about for weeks or even month. So also some people like to buy the dips, right? Because for euro dollar, of course you cannot sell the dips or buy the dips just blindly, right? But for the Aussie dollar, also know these kind of things. But for the equities, some people, they use the buy the dips strategy because they believe Janet Yellen will always be the supporter for the equity market. But even one day, Janet Yellen doesn't support equity anymore because she says she wants to hike the interest rate. But that is also a signal that the global economy, or even the at least the U.S. economy, can swim by itself without a life buoy, right? So meaning to say, can work by itself without the easy monetary policy. That should also be the positive news for the equities for the long term, or at least for the midterm, right? There might be some selling off in the near term, but if Federal Reserve dare to, you know, to raise the interest rate, dare to tightening the monetary policy, it means that the economy is roughly there already, and it's much better than today's. So it's a positive news for the equities. So this is just for you to, just for your information, how is the market treating this MH17 shoot down, right? So we see the Russian equities and the Malaysian airline is slumped. Well, we don't have the Russian equities platform. We also don't have the Malaysian airline platform. But well, this is just for your personal information. You can see how the Russian equities selling off in the last week, right? You can see it's slumped. The Russian equities, you see the index is from on Thursday, it was about, on Thursday session, it was about 730. Then all the way, now it's only about 688. So it's about 10% already. Also, for the Malaysian airline, you can see it's a huge selling off. It's from 0.23 all the way to 0.2 now, right? So it's from 23 cents or 20 cents, there's a huge percentage. On intraday itself, it lost a value about 10 to 13%. If you have other platform, of course you can looking at this too. Okay, so now we are zooming into a little bit more details of what Janet Yellen testimony. Well, it's no clue as expected, right? But we still put the keywords here. So for you to decide, let's say probably you can find out something which I cannot find. So you can have some insights. So I summarized the entire speech for a very long paragraph. So I just summarized to 4 most important points. Number 1 is the Janet Yellen told the lawmakers that the central bank must press on with record monetary stimulus to combat persistent job market weakness. So she mentioned lots of weakness in the job market, but I think the weakness is two. One is the wage growth. The other is the participating rate. So if you see either one picking up, the wage growth picking up or the participating rate picking up, then probably it's the time Janet Yellen will looking at to tighten the market a little bit. This thing is keep going up. Okay, so I don't know, just keep pressing no. Okay, so if wage growth currently is year-on-year is 2%, so you can see if the year-on-year, let's say it goes to 2.1, 2.2%, then probably it's a time for you to long US dollar. But now US dollar, I would say it's only a very gradual or bumpy pace to go higher, although the economy recover, because people already believe that in this kind of a current pace, in the current scenario, there's no way for the US dollar to have a very strong rally. So you have to be very cautious if you want to long the greenback. Number two is, Janet Yellen said we need to be very careful to make sure the economy is on a solid trajectory before we consider raising the interest rates. So it almost eliminates the chance that the Federal Reserve were talking about raising the interest rate at the third quarter. As early as probably she will mention change color scheme to window sale. Okay, let me see. I need to really close this. It's very irritating. Okay, I don't show this message again. Okay, hopefully it doesn't pump up again. Okay, so we need to see still we need to see inflation picking up. We need to see the wage growth picking up. We need to see the participating rating picking up. Then you probably will see the dollar will go higher. Right, so no worry on the dollar part. Like say I cannot catch the trend if I don't long the US dollar. It's not a concern now, because now the US dollar probably the pace is still very slow, and the entire monetary policy tightening, the process is very long, right? Because the Janet Yellen mentioned she want to be very cautious, she want to be very patient. So if this is the story, you still have lots of room to go. If the entire process is very long, it tells you that the entire process for the dollar appreciation also is very long. Yellen also say low wage are one of the signs of the significant slack in the labor markets, even after the jobless rate fell to almost 6-year low. Right, so this is what she mentioned, wage growth. So when last year people are looking at non-farm payroll, people are chasing for the unemployment rate going lower and lower, see whether it can reach 7%, 6.8%, 6.5%. So now you can see that the angle is a little bit changed. It's changed to low. It's to wage side. So the Federal Reserve last year is chasing the quantitative figures. So now they probably are focused more on the qualitative side. So they want the jobs growth have more quality, not only quantity. A high degree of the monetary policy accommodation remains appropriate. Yellen say in her semi-annual testimony, although the economy continues to improve, the recovery is not yet complete. So from here you can see that she really have no intention to tighten the labor market, to tighten the monetary policy, maybe in the next 1 or 2 months at least. So we don't expect the greenback to rally from here. But okay, you cannot really follow. Of course, we need to take a reference on what Janet Yellen say, but sometimes we also cannot 100% follow that. We must have some our own thoughts, right? Because you have to work. If you want to get a profit of the financial market or capital market, you have to think before the thing happen, and you have to have a right prediction, right? So based on the current U.S. economy, whether the uptrend is sustainable in the midterm, I would say yes, right? Because it's really, you can see all the indicators are pointing to the high side, to the upside, not downside. Even you're looking at the inflation, people would think all the Federal Reserve dual mandates, one is the labor market, the other is the inflation, right? So even the inflation now is picking up. And now the inflation, I think, is on the PCE basis 1.6%. It's but it's moving toward to the Federal Reserve 2% target. So we need to be a little bit cautious here. They might might be on September or October, suddenly they will turn maybe 90 degree, not 180 degree, but they will turn 90 degree to say, okay, now we are looking at the different exit strategies. Maybe second quarter next year, we are going to raise the interest rate if the current momentum to be maintained. So if you hear this kind of languages, probably, you know, it's the time for dollar to rally. So also, you don't have to look at the U curve, because the U curve was disguised by the jet shooting news. I can see the U curve. If the U curve, you can see the long end, 7 years, 10 years, you can see the curve is more flattening compared with last week. So this doesn't mean you have a dovish Federal Reserve. It's not. It's all because the geopolitical risk push people go for some safe haven assets like US 10-year treasuries. That's why the yield curve was lower. Okay, now we are talking a little bit on the China GDP. We'll give you some insights of what will happen probably in the coming 6 months. The China GDP suggests the further easing in second half would be seen. Why? You know, lots of people are saying that reform, right, since beginning of the year, but we still think it's a very comprehensive reform from China. Probably, I don't see it will happen by end of the year, right? At least not whether it's 2015 or 2016, I don't know. But while we're looking at the 6-month horizon first, probably it will not happen first. The reason is why. Let's see the next slides. So we have to know that how powerful is the easing measures in China, right? So you can see the China's second quarter GDP go to 7.5%. It's a pretty decent number. We don't expect it to go 7.6, 7.7, right? Because the first quarter GDP is 7.4%. So the second quarter GDP is 7.5%. So it's only 0.1% higher. But it tells lots of things, right? So the picking up is most because of the PBOC liquidity injection. You have to know this is number one. Number two is the loser loan deposit ratio rules, because in China, the banks, you have to hold you have to make sure the loan to deposit ratio is no more than 75%. But now they do some adjustment of the calculations. So under the new calculations, probably last time, if your result is 72%, your number is 72%. So after the new calculation, your number is 70% or 69, 68%. So 3% of the entire assets is released, which is you can lend to the public more, right? So they adjust the loan to deposit ratio. It's also kind of a target stimulus. Also, they cut the reserve required ratio for the SME and the rural focused banks. So all these things will carry on in the second half of the year with that. Otherwise, they cannot achieve the 7.5%, the full year growth target, right? We hear the Premier Li Keqiang mentioned 2 times, at least 2 times. One time is in London. The other time, I forgot it's where, but it's also recently. He mentioned that the growth target for China is still, actually, the word from his mouth is 7.5%. It's not about 7.5%, it's 7.5%. But the local media after that, it's like Xinhua Se also mentioned that it's about 7.5%. But whether it's about 7.5% or 7.5%, the bottom line is they want to maintain the growth, but also without the large stimulus, meaning their confidence level is pretty high. But whether it's easy or not, let's see the next slides. But before these slides, you see, these 3 areas are the major stimulus that China is doing now. So if you see more measures to come out, for example, more and more cities, let's say, are going to ease the property and the mortgages purchase restrictions, and probably it tells you that the easing measure is getting more intensive. So people are arguing that whether there's still room for China to do infrastructure investment, right? Because, you know, nowadays it's like infrastructure is a negative word in China. It's not a positive word, because, you know, lots of economists and analysts are arguing that, okay, the China should have more consumption base. You know, they shouldn't do lots of infrastructure investment anymore. But we are looking at, this is the source which is I get from the International Union of Railways, also from the Bloomberg. So you can see that the space still have a lot if they want to do the infrastructure in the various line. If you want to compare with the other developed market, you can see the first is the railway length for China. Where is that? It's very low. It's even lower than Brazil and higher than the India, but it's much lower than US, Japan, and Korea. So the space is there, right? Also the telephone lines per 100 people basis, you can see it's same as Brazil. But looking at the telco industry, Brazil is more advanced or more popular now, or China is more popular now. Of course it's China, right? So but the lines is still much lower than the US, Japan, and Korea. So now we are looking at access to electricity by the percentage of the populations. It's same as Korea, Japan, US. On this part is on par, but you're looking at the access to approved sanitation facilities. You can tell us that yes, also have lots of room compared with to Brazil, compared with US, compared with Japan, compared with Korea. So there is the room for China to do infrastructure. If there's more infrastructure projects to be done, of course it's a positive news for the China GDP, for Chinese growth. In the meantime, if you see the Chinese growth picking up, that provides some positive signs for the Aussie and for the Kiwi. That's the currency traders are most interested. And the other piece of news is by end of August, which by end of next month, there will be total about 64 railway projects. Actually, they need to be approved by the officials, by the government. So now I think it's only approved about 30 to 40. So there's another half will be approved. So you will see more infrastructure projects which to come out in second half of the year. So that will provide some sort of support for the Aussie or Kiwi. Okay, so now let's see whether from the number point of, from the number itself, you can see whether it makes sense or not. You see some numbers here, which is the Chinese GDP. Let me explain to you what is that. So you can see that, let's look at the number below 2013, right? You can see 7.7, first quarter, second quarter 7.5, then 7.8, 7.7. So this number tells you that the second quarter GDP last year was the lowest. And the GDP is all about, we are year-on-year basis, right? If the last year's third quarter and the fourth quarter, the GDP number is much higher, meaning to say that we have a higher base, so it will be more challenge on second half of the year, right? Right to say so, right? So let's looking at this year. First quarter 7.4%, second quarter 7.5%. So on average is 7.4%. Meaning to say that if China want to achieve 7.5% full year GDP, okay, I give them some discount. Let's say they want to achieve 7.4%. So on the second half of the year, they have to achieve maybe 1 for 7.5, 1 for 7.4, or 1 for 7.4, 1 for 7.6. That's not easy because the reason is, you can see the second quarter last year was the lowest. But the second half of the year in last year, in 2013, is the highest. So they need to do more stimulus if they want to achieve this target. Otherwise, there will be some challenges to coming. So let's see. But just based on the number here, we would have a conclusion that they need to do more. Also, yesterday, actually it's today, China also announced a new news, which is they may start to support the mortgage-backed securities because the property is slump, right? You know, the property always is a very hot topic in China nowadays. We see some cities in 2014 the price drop. Whether the price drop is because of supply to demand, or whether the price price drop is because the government restriction, which is no one knows, right? Probably half. But the thing is, 30 key cities every month this year, and the price drop year on year in 55 of 70 cities in June. So there's more and more cities the price are drop. Right. If you want to talking about the reform, it's a long topic. We need to spend maybe 3 days, 4 days, entire 3 days, 4 days to talking about the reform process. But meantime, I still feel the property price will be stabilized, will be supported. The reason why is the property to China GDP is about 20 to 30%. And I'm talking, this is the direct effect. It's not the indirect effect. Indirect effect is, the construction, the steel sectors, that's all about relevant to the property price. If the property price drop, some consequences is quite severe, like property developers cannot pay the loans back. If the property developer cannot pay the loans back, then the banks also will have the bad loans. Then the shadow banking sectors, you will see more defaults to come out. Then the entire lending cost will go higher. The 7 days reverse repo rate will go higher. Then the entire country's borrowing cost will go higher. That's the first thing. The second thing is lots of, like what I mentioned earlier, is lots of GDP actually is contributed by the property sectors. So if the property sectors drop, the China will have some challenger to achieve the 7.5% target. They might not even can achieve 7.3, 7.4%, right? So now the government using the mortgage-backed securities to back up the property price. It's a new target easing measure. Whether this is positive or negative, we don't discuss here, right? It's a pretty long topic again. Whether it's short term, in China it's always short term versus long term, but how much you're willing to sacrifice for the short term, and this short term sacrifice will not trigger will not trigger some negative consequences for the long term. Well, it's a long story, but at least we see for the short term this is a positive news, right? So you see the government is really putting more and more efforts to revive the property market. So after talking China, because we don't have lots of news this week, so we are taking a look on the global currency outlook in the coming few months. What kind of direction probably you can looking at? Okay, number one currency pair is we always looking at the sterling and the euro sterling, right? You can see that by middle of last month. By middle of last year, you can see the UK, the euro sterling actually is falling in a very clear downtrend, and we think the trend is not over. Now the price is around 0.7920, and probably we are looking at the 5-year low, which is at 2012. The price is at 0.78, this level, right? The reason is because the eurozone economy now is not so, it's still quite stable, but the upward momentum is a little bit fading compared with the 6 months ago, right? Also, that is asking the ECB to do more in the coming few months, and also the European the eurozone PMI you will see for this week, it probably will also drop from the last week. So all in all, we think the downtrend of the euro and the sterling will carry on. Second is short Aussie in the near run. Might not be a wise move, right? So basically you need to look at 3 things to decide the value of Aussie. We do this in the poll last week, right? One is the China number, China data. Second is the Federal Reserve. The last part is the RBA job warning, right? So let's go one by one. Number one is you're looking at the China data. Probably, in order to achieve 7.5% target which we mentioned just now, right? So the Chinese government need to do more, and you probably will see the data will even improve in the coming few months. In this kind of scenario, it's quite dangerous to short Aussie. Number 2 is Janet Yellen. Unless we hear something like Janet Yellen is ready to raise the interest rate, is ready to exit the current easy monetary policy, then probably dollar would go higher. But at this point of time, dollar probably, I would say, will maintain flat or maybe slightly go higher, but that doesn't affect the value of Aussie. Number 3 is the RBA. RBA did some warning, or you call it job warning, in the beginning of the month. It brought down the Aussie 50 or 60 basis point, but after that, what? No one cares. And also, it looks like the RBA is not very particular on the value of the currency. What the Glenn Stephen, what he mentioned, just he said the Aussie is a little bit high or maybe overvalued, but what? Who cares, right? So at this point of time, if you, let's say you don't want to cautiously buy Aussie, at least you don't have to sell Aussie, right? Unless we see something change. But at this point in time, we see this trend continue to carry out. Even you see the line in the up, which is the green color, you can see this is the Aussie and the Kiwi, right? New Zealand aggressively raised the interest rate, but you see how the Aussie Kiwi moves. It's flat. I call flat is still not very accurate. The very accurate say it looks like a very gradual uptrend from middle of the March. Am I right? So middle of the March, the price you can see it's about 1.0520. Now the price is 1.0789, 100 basis point higher. Not 100, maybe 150 basis point higher in the entire 6 months. So it's just dangerous to long Aussie at this moment. And the last, we are talking about the how the dollar yen move. The dollar yen, we see that if the price reach to 101.25, it's the current price. If the price near 101, it always offer you a good buying opportunity. So now you can see in the entire year, now dollar yen is quite near to its trading range. So if you want to take a ride, if you want to use the trend, to decide where the price can go, you probably can doing a long the price near here. But again, provide there's the geopolitical risk didn't get escalated. Okay, so after the 45 minutes fundamental analysis, let's go to our poll. Our poll is getting more and more interesting. So the poll is, can we continue to buy risk assets? Risk assets means equities or some other risk currency like Aussie, Euro in the coming a few months in general. Right? You can choose yes, you can choose no, you can choose buying cautiously, you can choose selling when rally. Oh, by the way, just have some announcement here because next Monday is a public holiday in Singapore and Malaysia. So I'll be also overseas. So there's no webinar for next week. So everybody, I think it's, if I'm not wrong, it's Hari Raya, right? So it's a public holiday for Singapore and Malaysia. So I guess most of the audience here are from these two countries, so we take a break for next week. So we will resume the webinar in 2 weeks. Okay, very great. Today is 85% voted. We have a 6% choose yes. Just continue to buy the equities or risk assets. 9% choose no, it's not a time. And 65% choose buying cautiously. Buying cautiously means if you see the price drop like last Thursday, just buy. And the 21% choose selling when rally. So quite surprised me, we have about 1/5 of the population here. I'm not very bullish on the economy, or maybe we think the Fed will raise the interest rate very soon. So, well, it's not a big deal. It's just a survey. Okay, so now let's go to the next session. Let's close the poll. Okay, so let's take what's the events for this week, right? You can see today, basically after this webinar, you can just go drink with your friend, go play a computer game, or if you want to call your boyfriend and you want to call your boyfriend or girlfriend, just carry on, because today there seems like no economic data, but whether there's any geopolitical data come out, I don't know. Here is a very interesting thing, okay? Because last week, right, I joked with a few friends, so I just tell them that for the last week, after China announced the GDP, can just go rest, because the market won't move already, because we don't have lots of data on last Thursday and Friday, right? Then Thursday, that thing happened. Then Friday, a few of my friends teased me. See, hey Jimmy, you say that Thursday and Friday no move in the financial market, but why there's such a huge move? Then I tell them, if I know the things this airplane shoot down, I can expect that to happen. Probably the US, the intelligence unit, like the FBI, the CIA, will call me for coffee already. We're not sitting here to talk to you already. So anyway, just kidding. So the thing is, lots of things in the world is unpredictable, right? So you can predict some financial data, but there's always some like geopolitical risk, like something which you cannot predict at all, right? So okay, let's see for Tuesday. Tomorrow we have the 11 a.m. we have the RBA Governor Glenn Stevens speak. So be a bit careful here. You need to be very cautious here, because you don't know what he will say, right? So whether he will use a very strong tone or he will use a very soft tone to remind the market that the current Aussie is very high. No one knows, right? This is also something no one knows. We were not surprised, let's say, Glenn Stevens are saying something, which is bring the Aussie 100 basis point or 50 basis point lower by using a very strong tone. It's possible, right? So let's watch for it. On tomorrow night, it's also very important is you have to watch the US CPI, right? It's very important, although the Federal Reserve are looking at PCE, but CPI is also, it's inflation data to tells you that where's the US inflation at. And also we have the US existing home sales. So tomorrow morning and night, 11 a.m. and 8:30 p.m., you have to be very careful about the news here. And on Wednesday, we have the Australia CPI. The Australia CPI is not so important compared with the New Zealand CPI, right? Because the RBA already put the words very clear that the inflation will below the RBA trend, will below the historical trend for some time. So it might not be so important, but it will still affect the Aussie, but maybe just for short term, not long term. On Thursday morning, if you are a Kiwi trader, you have to wake up a little bit earlier if you stay in Singapore, Malaysia, or China, or Hong Kong, because on 5 a.m. we will have the RBNZ cash rate, right? So you can see the consensus is pretty on the same direction as the last time is 3.25%, and the forecast is 3.5%. And also we have the trade balance. Trade balance, although you can see the trade balance is much lower than the previously the forecast, but like what I said just now is the interest of the RBNZ, the New Zealand Central Bank, is not the growth like Australia. They're not very particular on the growth. They're very particular on the housing market. Also on Thursday we have the China HSBC manufacturing PMI. Also we have afternoon we have the Eurozone PMI, right? So this PMI intraday, probably I would say it might give you some opportunity to short Euro Aussie this pair, right? Because the European PMI is unlikely to to give a surprise move, and also China CPI of the PMI probably will give you some surprise upside move. And the good thing is it's not at the same time. One is announced at 9:45 a.m. The other is announced on 3:30 on 3 p.m., 3:30, 4. Then I think the aggregate is out on 5 p.m. So just be a bit mindful of the data here. Friday we have the UK, the sterling, the UK GDP, right? So based on the number in second quarter, the GDP is pretty interesting. So let's see what's the consensus. The previous is 0.8%. Forecast is also 0.8%. Let's say the GDP is higher, much higher, or even much lower than the figure here. You will see some big move of the sterling. Right? So that's all the important data you need to watch for this week. You can see that the heavy data is on tomorrow, Tuesday, not heavy data, important data, and on Thursday. So be a bit careful on these 2 days. So here just something is we just have an education platform which is announced a few months ago, right? So you can just go to www.fxprimus.com/education. If you have you want to see any reports, you can just go inside. Inside there's a daily market reports. There's the other is ASEAN reports. Also we have the Forex breaking news. Also we have the weekly reports. So it's all conducted by our research team. And also we have if you want to try out, besides you have the live accounts opening. So now let's go to the charts. Let me pull the charts out first. Okay, so let's look at the first currency, which is the euro dollar. Look at the hourly chart. Euro dollar is pretty clear that it's formed in a very clear range trade after last week. So you can see the high side, the price stays around 1.3560. The low side stands around 1.35, right? This is exactly what we expect last week. We mentioned that the price might swing between 1.35 to 1.36, but the 1.36 it didn't go, right? So meanwhile, probably from now to Thursday, when euro announced the PMI data, probably the euro will continue to stay in this zone. So if you see now the euro dollar, we don't for the short term trade, because I just highlight something is for this session. When we put the charts out, right, so everything we go to very short, right? So I am an economist, but so of course sometimes I was talking about a more long-term trade, but for these sessions we always talking about very short-term trading directions, right? So let's go here. So it's before the PMI data is out, probably with the market will not have lots of direction here. Most likely we'll see the pair will continue swing between 1.35 to 1.356, this kind of level. So now the price is at 1.3520, right? So there's a two-way actually you can do. One way is you wait for the price to retrace to near 1.35. Doesn't necessarily to be 1.35. The price can reach 1.3505, this kind of level. You can just post a long euro dollar. And probably the stop loss you can put in at about 50 basis point low at 1.3450. Right? So if the price have the chance, let's say, to reach 1.3550 again, then probably you can do a sell again. Right? If you enter now to buy or to sell, which the current price is at 1.352320, this kind of level, the upside space probably is very little, maybe only 30 basis point, or the maximum maybe 40 basis point in this coming a few days, right? So this is one way to trade. The other way to trade is since we think euro dollar probably will drop after the PMI data, right? So if let's say you're looking at the German ZU index and you're looking at the confidence index, you see the price. Let's say let's say you see there's a higher chance that the PMI will drop. You probably can post a short order either near the data announced day, or probably you can put a short order if the price can go to 1.3550, right? So then after the thing happened, if the euro drop, so you can just take profit when the price stabilized. So that's the basic trading idea of how you trade euro dollar for this week. Okay, number two, second, we are looking at dollar yen. Dollar yen hourly chart, you can see that It's a very clear range trade, right? So let's go, maybe go 4 hours chart. Even the 4 hours chart, it's also very clear that it might be a very good time to buy dollar yen. The price near here, the current price is 101.30, right? So we can see that from 6th of June or 7th of June, from now, in the past about 40 days, the dollar yen trading range is very narrow. The lowest is about 101.5, the highest is about 102.23. And let's do an assumption, provide the Ukraine that case didn't escalate further, then we probably can look into long dollar yen now, because dollar yen selling off, you can see in the past few sessions, is mainly because of this news. If the things is stabilized, probably the price will moving higher from here, but we don't expect to move to 102.23 because that needs lots of strong data from US to realize this. But we don't have lots of US data this week, only the inflation tomorrow, and what else? Durable orders on Friday. So this is not sufficient to move the euro dollar yen to this level. So you probably can wait for the price, if possible, wait for the price, maybe another 10 basis point lower, 101.20. If the price has the chance, let's say, to reach this level, let me draw another line here. If the price can move, let's say, to this level, 101.6, which is about 40 basis point profit, you can take the profit from here. It's pretty decent, right? So after that, if the price reach 101.61, if nothing happened, you can continue to short this pair. So now the currency market, you can see every currency they share with the similar pattern, with it's kind of in a range. So when in this kind of market, the most important thing is, number one, be patient, right? So if you don't patient, you are very easy to get wiped out by the market. Number two is, so you have to get the right range zone. So these are a few levels you can looking at. Aussie dollar, you can see it's in a, I draw 2 lines here, right? But you can see that it's still in this range. Besides the end of June, right? If something happened, it shoot up, but most of the time it still stay in this range, which is in 0.94 to 0.9334, right? But trading strategy now for this week, because we have the China PMI data, is a little bit, we need to adjust it. I just now say it's pretty dangerous to short. It's not very wise to short if the price is near at this moment, right? So you can always wait for if the price can reach maybe 0.9350, which is 30 basis point lower. Then looking at to take profit at 0.94, 50 basis point. So some of you might say, okay, why only 50 basis point? So not 100 basis point. You know, sometimes what profit you take or what kind of losses you encounter is all decided by the market. If the market only give you 50 basis point move, of course you cannot get 100 basis point unless you do more, right? So, but for be safe, even at the current market, you see the volatility is a bit low. Also, don't add your position, because you know nothing tomorrow you will know. If we all know tomorrow what will happen, then we don't need to work already, right? So just kidding. But still, my strategy is a bit cautious to bullish on this currency, not to sell this currency. But still, we need to listen what Glenn Stevens talking tomorrow, right? So if let's say tomorrow he give a very negative comments, if it's even good for this view, right? So because the price will drop. Then on Thursday, if the manufacturing PMI picking up, then you will see the Aussie have more space to go higher. So let's see what he taught tomorrow. Kiwi dollar, next pair. So the price is near our support level at 0.8650. Right, so plus you see the RBNZ is likely to raise the interest rate by this Thursday. So you can always probably you can find the price near this level to do a long trade, right? So there's a two level you can looking at. One is 0.865, 1.8650 1.8680 near the current level. The other level, if you want to be cautious a bit, you can looking at 0.8640. Right. So if they raise the interest rate, definitely we will see the Kiwi will rally, right? Because every time if RBA decide to raise the interest rate, no matter it's expected or not expected, the Kiwi will always go higher, not lower. So basically, we're also not going to tell you what kind of level you can short for this week, right? So the direction for this week is still long this pair. Gold, you can see it's going higher, going lower, going higher again, but I still carry the view is the level near 1320. You can always looking at to short this currency, this pair. But gold is a bit like the U.S. Treasury yield. It's very sensitive, especially whether it's risk on or risk off. You can see when the Malaysia airline, the jet shooting down, you can see the gold was shooting up from 1305 all the way to 1318, right? Or even 1324, right? So for the current level, I think it's a pretty, if there's no conflicts to be escalated, I think the current level you can see is a form a near-term double top, right? So 1318, the price touch this level, probably I will do a sell, but of course you need to put the stop loss. Okay, so now let's go to Mario trade call. So what's the Mario trade call for this week is Mario trade call this week is to long Kiwi dollar. Entry price is 0.8725. Stop loss is 0.8690. First profit is 0.8760. Second profit is 0.8795. So I will leave the charts here. Meanwhile, if you have any questions, you can just type in the box so I can answer the question for you guys. Okay, let's go to the question box, see what question today. Thomas Liu is asking, how many months China will do the stimulus for? It's a very tricky question, but I think for the next 2 to 3 month time, they will continue to do the stimulus. Then we probably need to use the third quarter data to monitor. If let's say the data is consistent, point to the upside, and let's say the third quarter GDP go to 7.6%. or even 7.5%, then probably you will see the stimulus pace will be slightly going slowly, right? But let's say if the third quarter GDP is 7.4% and the economy looks a bit shaky, then we will expect more aggressive stimulus from China. So all in all, we think this trend will be benefit the Aussie dollar. Jason Kwan is asking, when do you think the Federal Reserve will raise the interest rate? We still continue to stick to our view is June or end of second quarter or beginning of the third quarter next year with the time for Federal Reserve to raise the interest rate. Although we hear that Janet Yellen speak lots of policy rhetoric, but we think by this kind of time she has to raise the interest rate. Now, I believe the Federal Reserve already, in the back end, they already prepare lots of strategy or testing lots of rate hike strategy already, but they just didn't tell the market, didn't tell the public. They don't want the tapering tantrum to like 2013 to visit us again. Amy is asking, can sterling remain the current uptrend? I think the chances are pretty high. You can see that the Bank of England is really very headache on the inflation and on the housing market already, and all the policy the yields at this moment probably is not enough to contain the housing bubbles. So I think the chance in fourth quarter to raise the interest rate is about 70%. On the first quarter to raise the interest rate next year is about 30%. So in this period of time, it's the best time for starting to rally. When the most of the time, when they hike the interest rate already, then you will see the trend will be a bit consolidate or be a bit messy again, because they want to see what's the next move of the central banks would do. Things is always happen before the thing happen, not after the thing happen. Fei Li is asking, because there will be quite few important data released in the second half, do you think technical analysis will work well in the second half? Okay, in the second, I'm not very sure. Sorry, I'm not very sure which economic data you are mentioned, but second half definitely there will be lots of analysis. Okay, maybe you're talking about this week, right? So for this week, I think yes, you're right. Probably the technical analysis would be pretty important to tell you which level you are looking at. But some key data I just mentioned just now is you need to look at the U.S. inflation. You need to look at the what RBA say tomorrow, and also on Thursday, what's the PMI data. Morthia Lanham is asking when the Forex volatility will pick up. It's a very good question. It's not the Forex volatility will pick up. It's the entire financial market volatility is very low, right? So things is always like this. Okay, when the economy is good, when there's no bad news to come out, volatilities, or even you can hear the TV always see the VOS. The VOS is always very low. So if you can see like past 2 years, some crisis to come, then the VOS will go higher. So at this moment of time, you really cannot find any very severe, severe problem in the financial market. So we think the VOS will continue to stay low toward the end of the year. Okay, so that's all for today's webinar. Hopefully it gives you guys some insights in the late data, in the very light data of the week. So I will see you guys in 2 weeks, because next week is the public holiday. So good night.